Good morning, everybody. Welcome in. I hope you all are having a great morning so far, or great afternoon, wherever you are in the world. We're going to look at some stuff today. I am interested to see so yesterday, Zim, which is a stock that I am currently in. Zim is a shipping company. We're going to take a look at the chart. This is a position that I've held for quite some time. I'm also in Moderna. So a lot of you are familiar with Moderna, pharmaceutical company. We'll take a look at that. So let's go over to my TradingView charts and see what we have going on this morning. I think I defaulted to Apple. So I usually have Apple up here, usually what I check at the end of the day. So let's go to Zim. So let's look at Zim and see what we have. As you can see yesterday we had a big down day, down about 6%. Today we're up about 1.2%. So you can see kind of how these things just fluctuate on a daily basis. It's pretty wild. And you can see the fluctuation with Zim over the last several weeks. Now, is this a good thing for stocks? Well, I don't necessarily know. And as I'm speaking, I'm going to change this. I don't necessarily know if it's a good thing for stocks. It depends on the type of trade that you're trying to make. So if you're a person that likes to trade something that is more volatile, you like to take a little bit more risk, then yeah, this is probably something pretty good for you. If you're somebody that doesn't like to take a lot of risk, then no, this is not good for you. I prefer these more volatile stocks when it comes to day trading, but there's something interesting here about Zim that I really like, which I will go through today, as I've gone through several times on the channel, but I think it's really important to hammer home the reason that I like Zim and the reason that I like these types of volatile positions so much. So with Zim, let's just start. Actually, you know what? Let's start out with, let's just walk through the entire trade, why I got in. Okay. So let's pop this up. This is my weekly chart. And let's see here. Okay. So let's do some drawing. So I'm going to just put some lines up here. You know what? Let's zoom out even further. Let's zoom out all the way to its inception. So now we have the entire chart here, right? This is all the way to inception. This is when Zim started. So you can see this green dotted line is exactly where the price is today. Let's get the arrow there. So my whiskers are out of the way. So let's see that kind of base right there? You had the stock price moving around and it kind of created this base. Okay. Now let's go over here. You kind of had this U shape, and look where, kind of there. Here. Boom. See what I'm doing here? See how you have this kind of right in the middle of it. And then all throughout here, peak, trough. So peak, fell down, ran up, trough, ran up, kind of all along there. You notice that? Even here, look at that right there. And then right here. So this, to me, this is my bottom. So that's my bottom. Now let me draw my top. When I say top, I want to go right in here, right in there, and then right here, 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 here. Did it sneak through it a little bit? Yes, but not much to worry about. So these lines that I just drew for you, what I'm looking at is saying, all right, this is a pretty range-bound stock. Range-bound meaning it's bouncing between two prices, a high and a low. So my high is about $24. Can it bounce above that level? Yes, but if the volume is not there, it's not going to stay above that level. Down here, maybe it won't drop below this level of about 18. So now that we know our parameters, let's zoom in on the current price and see what we have going on. So let's just look at this level from May of 24. So we're kind of looking in this box right here. All right. So I'm going to go to yellow again. So if we just draw this base here, this is how I just draw my support levels. And then more importantly, the support level is kind of here. So the question becomes, can I get down to another $1? Can I get down to here? Basically, I want to get to about right here, right there. 1840. Is it possible? Yes, it's possible. Now, what gives me reason to say, yeah, it's possible? Well, now let's go to the trend. The trend is working with us. So I've had several people over the last couple of days say, Mo, we are at this base right here, right? We're there. Is the trade over? If the trend didn't look like this, I would say, yes, the trade is over. But we still have this downtrend. We still have movement to the downside. Therefore, I do believe this is still a trade worth being in. Now, let's check out the volume and see what we have. And there we go. So you can see here, we have a good amount of selling volume coming in. Now, if we just look at the last, right here, let's look at these last, if we look at right there, these days. So omit this. These days, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 days of selling. And 1, 2, 3, 4, 5 days of buying. So we've had 5 days of buying. So we've had 11 out of 16 days have been majority selling volume. That coupled with this gives me a lot of confidence to say, yeah, this trade is not over. Now, could the trade end at like $18 like we were talking about? Yes, that's where the trade could end. Because what you could do is get down to this level. Let's say you go down a little bit more and you just keep bouncing off this level. You can't break through it. You can't break through it because we don't have a ridiculously large amount of selling volume. We have a lot of selling volume, but we don't have a ridiculously large amount. And the trend could come all the way here to the bottom. And as it comes to the bottom, goes sideways, whatever, and then it could rebound back up. So 18 might be the low. We'll see. But the trade is not over for me. That is the point that I'm trying to make for you. Does anybody have any questions on Zim? Let's see here. I'm just going to brief through your questions. Okay. All right. Let's go to Moderna. Moderna is one of my, I made a lot of money on this one. I made about 35. Somebody can correct me if I'm wrong. I made a video on this. I think I made about 35% on it. I could be wrong, doesn't matter, but made a substantial gain on it. Recently got into it somewhere back in here. Had a nice run, took profits. It's rebounded up. Now it's in a consolidation channel. Now, should I exit? Well, there's a couple of things that are still positive for me. This is just a consolidation channel and a weak one at that. Why do I say it's a weak one? Well, just look at the colors. Green, red, green, red, green, red. Means that there's not consensus on which direction the stock price is going to go. Therefore, if that happens, the odds are in your favor that it's going to go down. Okay. It's easier for stocks to go down than they are to go up. Coupled with, look, the reason I got this thing is because it's a dog stock. Now, what is a dog stock? A dog stock is a stock that comes all the way down through the sweet spot to the downside and then just goes sideways on the bottom. What happens when you go sideways on the bottom? Well, your stock price just keeps going lower and lower and lower. And if we're looking at this right now, we're at 6% on our percent K. There is no positive trend here. This is nothing but a very weak snapback. This is going to break down even further. Now, where can we go? I think that we can come down here to, let's see. I think we can come down here to 29 bucks. I think I said $30. I think 30 to 31 was my more accurate number. So, dog's barking. Okay, let's see here. Next. So that's Moderna right now. And I am pretty confident in that one. Let's go to CCL. CCL is in Steve Cronk. We actually have a number of people in this one. Steve Cronk is in this one. I do believe that this one is going to roll down. This is a tracker share stock. What is a tracker share? It's when you buy one share. Why do you buy one share? So you see it every single day in your brokerage account. Now, why did I do that? Good question. Tracker shares are important because you lose sight of, look at this, guys. All right, so you look at this. So you look at this and look at all these stocks and they're ticking and they're flashing. And even if we come over here, look at this, ticking and flashing and so much. You're going to get lost in here. You're going to get lost in here. You have to have tracker shares on important shares that are really ready to go. Now, why is CCL ready to go? CCL is ready to go. If we zoom out here, you notice a lot of black on this chart, right? You have your high, you have your low, and then you have your 50% right in the middle. That was not a very good line. I wonder if I can do this. Yep. Let's see. Make make this more accurate. There we go. Now look at all this. Overhang. This is called overhang. Overhang is just negative pressure pushing down on the stock. Why does that happen? Well, all these people here, this was during COVID, they were at $60 a share, $50 a share, whatever it was. And all of a sudden, ships get shut down. Doesn't matter what the reason is. I'm just telling you what the reason was for CCL. Ships got shut down. Nobody could cruise. All of a sudden, the stock falls from 60 to 8. Drastic fall, right? And these people are pretty upset that lost all their money. And they say, man, if I could just get half my money back, I'll be happy. Well, stock price rallies back up. And what happens? People here, they start taking their profits and it comes back down. And it comes up again. And these people that didn't take their profits over here, they started, they just take their 50% loss. They come over here. Then it comes back down and it goes back up. And all these people in here, and I was one of them, said, man, can I just get out of this? Can I just get out of this? Now, I wasn't one of them in the sense saying I'm making up a 50% loss. I was a buyer down here. And I wasn't trading this one. But I'm going to bring in trading right now. This is one that I actually invested in because I thought that the thesis on Carnival it was being abused for no reason. It was being abused to the point of deep, deep value. Now, I don't think I was right in the thesis because they kept diluting you as shareholders, et cetera, like taking on debt, yada, yada, it doesn't matter. But the point is, look at this. I bought here. I did not sell here. I did not sell here. But when we got up in here, what do you notice happened? Well, this thing rallied up and it hit that 50% line. Remember that was the 50% line that I drew. Here's your high, here's your low, here's 50%. It hit it. Then it came back down and it hit it again. And it came back down. And I actually sold right here. This is where I sold. Why did I sell there? Because I knew from my experience in trading that this was not going to break through this level, especially with the volume that was being driven. Well, it did break through it, a touch, a shade. You can see that here's kind of the separation. It broke through it $1 or so. And then look at that. It has not touched it since. It hasn't even sniffed it since. This is the closest we've been. And look how far we still are away from here. $30. We're still $26 to $30. It's still a significant percent jump that this thing needs to take just to get up there. Now, will it break through here? No, it won't because the volume is not there. If we just come over here, look, guys, the volume is so weak. And let me pull up an average volume line here. Let me do moving average volume, yellow. Let me input it at 30. Okay. So you can see how well below average volume we are over the past 30 days. So all of these things are little things that you can use, even when you're investing, even if you're not a full trader or you're not kind of interested in full-time trading. These are little things that you can use. 50% roll works like nobody's business. Let me show you it again on Boeing. Boeing is another one that I absolutely crushed it on. From a value standpoint, buying and making an investment, well, what I thought was going to be an investment, turns out Boeing was a garbage company too. But they're $400 a share, $350 a share, whatever it was, came all the way down to, I think, $90. I bought it $99.99, ran it up to here in a matter of like a week, sold it, came back down, bought it again, sold it somewhere around 200. And I just kept doing that. Why? Well, look, high, low, 50%, right there. And did it sneak through a couple of times? Yeah, sure, it snuck through a couple of times, but it's not gonna stay above the 50% rule if the volume is not there. Why? Because it's just negative selling pressure. All the computer algorithms, they see 50% rules. They might not call them 50% rules, but they see this line right here. They see this line that's going to force them down. So little teaching there on the 50% rule. So you are welcome. All right. Yeah, Teddy is absolutely pissed because he wants to go outside. All right. Starbucks stuck on the 50. Let's scroll up here. Let's get to your questions. Starbucks. Okay, here's my drawings on Starbucks. Let me pull up this because somebody talked about the moving average of 50. Oh, okay, let me add this. There. So there's a little feature here on TradingView that when you let me see here. Let me change these colors real quick just so we can all be on the same page. There. No, I want to go there. Okay, and then we'll go. This is going to be yellow. Yellow is always just the color. I've used these colors my whole life. That's the reason that I use them. There's no right or wrong. But if you want to match my charts, you can. And if you are in the community, you know, or if you watch the long video that we made, it's everything that you need to know. So you'll have all of it and you'll know how to match my charts. Now, the reason that I wanted to pull up the daily is to see, because somebody said we're sitting right at the 50, and indeed we are. Now, why is that important? Well, let me clear all this crap out of here. Remove. Okay. So why is it important? Well, look at this, guys. This is interesting. Stocks tend to hug moving averages, especially the 50 and the 25. And if I look at Starbucks here, look at this. You're down here, you're on the 25, you're on the 50-day moving average. You jump up here, you break above it. You break well above it, and what happens? You come right back to the 25, right back to the 25, right back to the 25. Now you're on the 50. Now you're on the 50 and the 25. These things are like magnets. The stock wants to be on the 50. And why does that happen? Because you have computers that are trading that are going to say, as soon as it gets above the 50, I'm going to buy. As soon as it gets below the 50, I'm going to sell. And it's just that tug of war that consistently happens there. It needs to take a big event of volume that drives it away from the 50 or drives it below the 50 or whatever moving average it is. So if we just look at the volume down here, you can see it's back and forth volume. So let's just go as far back as the screen goes. It's probably the last 2 months, October, 3 months. So buying, selling, buying, selling, buying, selling, buying, selling. You can see it's just back and forth, back and forth, back and forth. Now we are getting a lot of selling in here. We'll see if that precipitates something like this, but honestly, I'm not counting on it right now. Let's see if we can. I want to short Starbucks. My goal here is to short Starbucks. But if we zoom here, what do you notice? Well, this kind of goes back to Zim. See that? See this peak, this right there? You had consolidation in there. Look at this. You started up here at 117. You came down and you kind of wiggled right there at the same price. Here, fell down, rebounded back up. Here's your base, 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 base. See that? This is going back, guys. This is going back all the way to 2019. 2019. You can see we just keep getting sucked back to this line. So it's important to realize we need to get below this line. So if I can get, what's my note here on Starbucks? I should have a note on Starbucks. It says start a 20% position below 93.69. So 93.69 would be, let's see here, 93.69. So right around here. Aha, makes sense. So when I just looked at that line, where do I want to be? I want to be below this and all of this and this peak right here and this consolidation in here and this trough right here from that gap. And you can see there's the chart is peaking out over there. So that's where I want to be. I want to be below those levels. Then I'll face resistance here. Then I'm off to the races. So if we can get below 90, I'll be a very happy guy. All right, let's see. Okay. Thoughts on Deere? So Deere was one that I wanted to swing trade. So let's pull up the daily chart. And we talked about this on Tuesday on the private live stream. If you're not in the community, we do this multiple times a week. There are private live streams that are just for the community members. So this was Tuesday. This was not an engulfing candlestick. I said, make sure you get enough volume to break this down because you need to have an engulfing candlestick. This was not an engulfing candlestick. We needed something that was more like this, right? You want to take out the low. Seriously, take out the low. That didn't happen. Today, you're not getting that. You need to go lower. You need to be down in here. You need to take out the low of Tuesday. So we need to be down in here with more buying volume. So look at this. It's 10:20 in the morning. Market's been open for 50 minutes, okay? Market's been open for 50 minutes. We have 80,000 shares traded out of 1.4 million. You need to have, by 10:30 in the morning, 30% of your average volume, okay? So if it's 1.4, call it, I don't know, 375, 400,000 shares traded, 450, I don't know what the number is. You got to have 30% of average volume before, by 9:30 in the morning. Why? Because what will happen? Well, what will happen is exactly what happened on Tuesday. See that wick right there? If you don't have enough volume, it's just going to suck right back up. And it's not going to create that engulfing candlestick to push down. That's the important thing that we see here when it comes to deer. Okay. Day trade question. Jonathan, are you MJR or something in the community? And is this the question that you asked me last night? And I said, put it on the chat. Just answer that before we get there. Let's see. Docu and short docu until 86. Docu. All right, DocuSign. I think I find it interesting the way he asked the question, short it until 86. Why did he say that? Okay, well, let's look. Let's get some whiskers going here. There we go. So 86.61. He really probably, 86. Look at that. It's not that much. Why did he say that? Well, look at this right here. This is called a gap. Why do gaps happen? Well, you have earnings often created. That's what that E is. You end the day here. Earnings come out. You jump up here. What happens? You leave a gap. So it's just it's a substantial difference between the open and the close of the day. I'm sorry. It's a substantial difference between the close of the previous day and the open of the next day. That's why gaps are created. So docu, the play would really be, so was this, okay, here was your earnings day, right? Was this an engulfing candlestick? No. Was this an engulfing candlestick? No. Was this an engulfing candlestick? No. Is today an engulfing candlestick? No. So I think the question was very valid in saying, do we short it down to 86? Yes. But what do you have to wait for? A sell short signal or a buy signal. You need an engulfing candlestick down like that. Okay. So you need something, let's say today, it's not going to happen today. Why? Because the volume is decelerating. By decelerating, I mean volume lower the next day, lower the next day, lower today. As you get decelerating volume, the speed of decline is going to be lower. Just like when you're going up, if you get decelerating buying volume, meaning that there's less buying volume today versus yesterday versus the day before, the speed of the climb is going to slow down, and it's typically just going to end. So, excuse me. You seriously need to get an engulfing candlestick like this with an acceleration in volume. Then you'll be off to the races. But that's the case right there. Okay, next. All right, Jonathan. All right, let's do this. Day trade. Short entry, $20. Stochastic is good. Price pulls all the way back to 2040. So I'm technically down 2%. But what if the trend is still good? This is talking about UNH. So let's do UNH. Wait a second. Oh, you're talking about a different stock. Okay. Listen, trust the trend. That's my thing. If you trust the trend, every time you're going to do well. If you start deviating, you're not going to do well. Are you going to lose? 100% you're going to lose. This is a game of averages. You're going to lose. You need to accept that you're going to lose. It's just a matter of how to control your losses and how to let your winners run. All right. How is Uber? Possible recovery. Let's see. Uber. Possible recovery? Let's see. Trying to see here. Yeah, I mean, this is probably the low for Uber. Yeah, this is it. And why do I say this is it? Until the next earnings call. You're just at a really strong base here. So you're at a base there, a base there. Now, you could come down to here, but I don't really foresee that. That's my opinion. I think that you're going to just kind of stick around with Uber. Okay. UNH. So UNH, I guess, let's see here. My opinion on UNH for this foreseeable future is to avoid. It's too news driven right now. I think a lot's going to start coming out about. I'm reading an interesting book right now about insurance, and a lot's going to be coming out about how much money they withhold and don't pay out to their insurance customers. I think that's going to hurt the stock. I think that's a lot of what you're seeing here. It was down 5.6% yesterday, another half. I just don't. To me, I'm staying away from UNH. That's just my opinion. If you want to trade it, you're more than welcome to, but be careful. What do you think about a Google day trade short if it takes out the low of the day? I would say if it takes out the low of the day, fine, but make sure that this is in the sweet spot. This needs to be down below 20%. Okay? That's a pretty simple one on Google. Thoughts on Tidewater? Did we see the bottom? Let's see. I don't think so. No, this can probably drop to 43, 42, somewhere in there. I don't think we saw the bottom here, especially because look at this. Look at it. It's a dog stock. So it can absolutely just continue to go lower. CCL, can I get in today? No, we already talked about CCL. You cannot get in today. Well, wait a second. Are we talking about going long here, Elizabeth? Are we talking about going long? You should really be at 6 minutes. Okay, so take a peek. Let me see if I can draw this. There, set 2.71. And then you have here 20.47. So you should really have 6 million shares out of 20,000 by now because it's 10:28 in the morning. The market's been open for an hour. So you should really have that 30% average volume by now, but we're not seeing that. We're not seeing that. Okay. All right. Let's go through some other stuff. Visa, I'm not seeing anything. Deere, we looked at. Target, Jets, Micron, Netflix, Tesla. I'm going to get rid of Tesla here. I don't want to short that at any point. All right, so Elizabeth was talking about a CCL swing. So let's pull up the swing. Let's pull up the daily chart. No, you need more volume, and frankly, you need a better candle. So you need a candle that's going to kind of look like that. So you kind of want to. This drawing tool sucks, but you need an engulfing candle that kind of that looks like that. That's not a wick. That's the entire candle. So you need this to be a big-bodied candle that gets you that engulfment. You're not getting that right now. LYV. Live Nation. You entered a short swing on December 5th. Okay, so this was not an engulfing candlestick. Why? You didn't really take out the previous day. I mean, technically it's fine, but the trend is you would have had to have something like that, a bigger candle taking out the low of the day significantly, and right now you're about to swing back up. So I don't really know what to tell you with this one. It was just not a great trade. Yeah. The reason, just because you need to have that signal, the buy signal, which is the engulfing candlestick. Identifying candlesticks is harder than it appears. It is. It just takes repetition. So, guys, I would go through. These are great candles right here. Engulfing candle, engulfing candle. I'd probably go with that one. I'd probably go with that one. This here is an engulfment, but it's not taking out the low. You want an engulfment that takes out the low, right? So what I would tell you as far as identifying candles is just keep going stock to stock. Start looking for engulfing candles that you would buy and sell on. So like these ones right here. Ignore the stochastic while you're going through these. Engulfing candle taking out the previous low. Engulfing candle taking out the previous low. Engulfing candle taking out the previous high. So that's what I would do. Just keep going through tons of stocks. Candle taking out the previous high. Engulfing candle taking out the previous high. So engulfing candle taking out the previous low, which was right here. So that's what I would do. And you see, when you buy those or sell short those, see what happens. It precipitates the stock down, precipitates the stock up. So I would just pull up a bunch of charts and just keep going. And don't worry about the trend when you do this. Just see where you would be, what candles you would be rolling with. For day trades, do you have a cutoff price like under $10? Yeah, I mean, you probably shouldn't go under 10. Definitely don't go under 5. Mo, can you go back to DocQ and explain why the second red candle from the peak wasn't engulfing? Let me see. Oops. Second red. This one right here. So if you get, so this one's twofold. This is not a great example because this was a jump on earnings and then you kind of let things calm down. So this was not engulfing because it wasn't taking out the low. It was a nice candle, but it's not taking out the low. It had to be all the way down here. Now this one, it was an engulfment, but really wasn't taking out the low. You want to take out previous lows. That's the idea here. Take out the previous lows so you don't run into a stone wall. December 10th. Yeah, I mean, I guess you can call it engulfing. It's fine, but at the same point, I want to take out the low. That's my opinion. December 5th, I had bought on daytime. Okay, so let's go back to that. It was LYV. All right, so December 5th, you bought. All right. Yeah, I mean, I guess. I still don't see it. Like, to me, I draw a line there, and that's the low of the day, and we're just not below it. Like, I always want to see that. That's me. And I think what we're seeing here is kind of that. See how you have this consolidation? That's kind of the reason I like to really like take it out, because you can just run into this. And when we say take things out, we're taking them out. We're not just beating them by 1 cent. So it's not just like 135.36, and as soon as it hits 135.37, you go at it. No, you want to be substantially below to make sure things run. Square going over 100. Square still a company? I thought it was called Block. No, it's not going over 100. Not with this. Decelerating volume. Not going over 100 anytime soon. Yesterday's okay. Good question. Good question. All right, guys, if you're not in the community and you enjoy what we're doing right now, please join the community. Try it out. It's cheap. You're going to get access to Trading 101 series, access to me, access to people in the community. It is a great spot to be if you have any curiosity in trading. And frankly, it's, what is it, December 12th? Start the year out right. Start the year out with a new skill, hobby. This is something you're going to use for the rest of your life. So don't look at it as, oh, I only have $100 right now in my savings account or whatever. That's fine. Eventually, you're going to have 100,000. It's better for you to hit the ground running when you have 100,000 or 50,000 or whatever it is. Then you're not going to always have $100 in your pocket. So I encourage you to join it. Link is in the description below. Check her out. All right. You're welcome, Sam. So engulfing candles and candles that take out the low are two separating things. Yeah, because an engulfing candle is an individual candle. Or it's not really an engulfing candle. It's just a good candle. So if we go back to LYV, this is just a good candle. That's it. It's a nice candle. It's a thick-bodied candle, but it's not engulfing. This is engulfing. This is taking out the previous high with a thick body. This is not really engulfing. It probably was at the time, but if we're looking in, I can't see at the time. It has wicks on the bottom and it has wicks on the top. So in retrospect, it's not really engulfing. This was engulfing at the time. I don't know what it looked like, but yeah, this would have been, I would have been happier if you would have got in on this one versus this one, because you were actually taking out the low of the day. That would have been my entry point if I had to pick. I think the trade is probably over. You're probably not going to get through the 25-day moving average unless you get a big jump in volume. I don't know. It's very possible that happens. Did you see the Trump Tower in Jeddah, Saudi Arabia? No, but I know that he's all over. He wants to bring together LIV and the PGA. I don't know. Whatever. I feel like we have more problems in the world than worrying about the freaking LIV and PGA Tour. But hey, you do you. All right. Anything else, guys? Any other questions right now? We go live here for the community on Tuesday, so we'll be back here on Tuesday with you guys. Please continue to send your questions in the Patreon app. These were really, really great questions today. These are the types of things, and when we talk about engulfing candlesticks, whatnot, this is the kind of stuff that I want. That when I say, do you guys have any questions? Ask them, because you're not going to. If you don't know what to do, you're not going to get better at it. But here's what you need to do. Go over the chart, like I just said, and make sure you go through each individual chart and just pick things out. Doesn't matter what the chart is. Just type in random ticker symbols if you want to. Go over here, type in X. It doesn't matter. And zoom out and just start looking for engulfing candlesticks. That's all you got to do. Here's one right here. Here's one right here. Very weird candle, but it is. Not an engulfing candlestick. This is kind of what, I can't remember who just said it, but it's a nice candle. It's nice. It's a big bodied candle, but it's not an engulfment because it's not taking out the previous day. Engulfing means that you're going, think about what the word engulfing means. All right. The word engulfing means like this, right? You're taking something out. You're engulfing it. That's not what you're seeing with that candle that I just showed you. So that's what it's important to see. What's your personal view on Tesla? No, I wouldn't touch Tesla right now. To be super, super careful with Tesla. There's a lot of people that are going to lose a lot of money on Tesla pretty soon. That's my opinion. Will they make it back? Probably, but it's going to be a very, very rapid decline when it happens. Just because the rise has been completely unwarranted and whatnot. I think, yeah, I don't want to get, because it's too news driven. The same thing for United Healthcare right now. Do not want to be involved with that one. So, all right, guys, you guys have a fantastic rest of your day, a fantastic weekend. If you're not in community, join us. And when you do,